Hey everybody, welcome to week 280. Yes, 280. And Jessica just went walking by. So hey Jessica. But we're in three different offices. High atop Shoemaker Palace is Jack Santinello. I'm in the podcast studio, and Adam is in our Greenville office. So
All right, I just had a
Adam,
quick claimant moment. Isn't 280 the model of a like 280ZX? Was that a
oh
model car?
yes.
Yeah,
Oh
okay.
280,
yes.
280. I actually had a 1977 Datsun 280Z, which was a
That was
car.
a great car back when it was called
Fabulous
Datsun.
car. Yep.
Not Nissan.
Okay, sorry for that. Had to get it out of my system. Please proceed.
Oh yeah, I had a buddy who had a 240. They had a 240, 260, and
Yeah.
280. 280
Yeah.
was the Mac Daddy.
Yeah.
So I
280 was the
expect,
Mag Daddy because it was fuel injected, much better engine, a lot more reliable than the
yeah,
240 and 260.
because they were carbureted.
Yep.
Yep, 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 yep. All right. Well, hey, welcome. And these guys are wound up and ready to roll. So there's plenty of current events to be talking about, plus the additional information that we need to dive into, especially in Jack's wheelhouse. But so before we get into Jack's wheelhouse, let's. Adam said that he's got a tirade, so buckle up, prepare yourself. Harass him in the chat, but save your questions in the Q&A. Go ahead, bud.
Yeah. Well, of course, I'm going to bitch about healthcare for a minute. So if we could keep the flames to a minimum, this is just more like, I feel an obligation to share data. Whether they're facts or not is a different story, but this is the data. So first, a lot of ballyhoo about what are we going to do about the healthcare subsidies and cost of healthcare, ACA didn't fix healthcare, all that kind of stuff. What I would say is that generally I'm in agreement with a lot of those statements. And I remember when the ACA passed in the first place, my first observation about it was, um, Duke Energy has to go before a public service commission to get a rate increase, but no health insurance company pre-ACA or post-ACA has to do the same. And now you're telling me I got to have, which makes sense. It's like, this just seems like it's probably not going to have a good outcome.
Yeah.
If you're going to tell me I have to have something and you have a public-private partnership, there at least ought to be some guardrails around the pricing, right? So, and the government's theory at the time was, well, because we have bulk pricing in Medicare, Medicaid, price will come down, plus we'll get blah, 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 blah. We're counting on private enterprise to do the right thing, which they did not do. So independent of the fact that Blue Cross Blue Shield is a not-for-profit and charges the same as the for-profits, I don't get that either. So for the people that say healthcare cost, ACA did nothing, our healthcare costs are still out of control. That's actually not what the data says. What the data says is that healthcare costs pre-ACA, if you just think about your insurance rates, healthcare costs pre-ACA were going like this.
Yeah.
So that's up at a 45-degree angle. You paying attention to that, Gary?
I'm paying attention.
Which in real numbers was like an 8% per annum in the 10 years prior. Now they're doing that. So it went from this to that, this to that, which in real numbers was, it went from like 8% increases to 6% increases in aggregate, which, isn't a lot. But when you extrapolate over 10 years, if you look at where the destination would have been had there been no ACA, barring any other changes, it did actually bend the curve a little bit, this to that. So that's clearly not enough because we wanted to go from this to like that. You know, like
Yeah.
maybe not have our healthcare costs rise at a rate every year of 3 times the rate of inflation, please, would be fabulous. You know, so all that said, you know, I think the problem that you're, so that's just a statement to like the people that are like out there, you know, blah blah blah, didn't do anything, it didn't do much, but it did a little. That's just what the data says. Had there been nothing done, plus more people that weren't insured now actually have it. So then when you get to the cost, like, well, I mean, the cost is just ridiculous. You know, you kind of get to when people talk about entitlement reform, you know, in terms of like, hey, we're handing out too much free money. They're actually like the Democrats are actually very good at one thing and one thing only, as far as I can tell.
Spending money.
But they're also very good at taking some money to pay for what they want to spend the money on. So if you look at the ACA in general, you know, while it's not cost neutral in terms of like the outflow equals the inflow, there are 2 specific taxes that fund it: the net investment income tax and the Medicare surtax on excess W-2 wages. So my point in saying all this is like very similar to the argument around, well, we're going to change the, you know, we're going to change this in Social Security and we're going to change this in Medicare, Medicaid. It's like, I'm going to expect you to reduce my tax rate then if you're going to do that. Like, you can't take my money for a purpose and then take away the thing that it was funding, right? Like that's just not. I'm not going to be okay with that. And I suspect other people will not be okay with that either. So, you know, any sort of like reform that doesn't involve something that makes it at least more cost neutral. Like, in other words, if I'm going to pay the tax, I want to know what purpose it's going for, right? So that's just statement number 2. I think statement number 3, before Jack pulls me out of a ditch and saves this whole webinar, is, you know, I heard a guy the other night on the news that said, well, I mean, there's fraud in ACA. Here's the problem with that statement. You can't, like, when you sign up for the ACA, you have to certify 2 things. One is, I don't have health insurance provided by my employer. And 2 is, I only make this much money. And if both things are true, I qualify for, well, first off, you know, regardless, I can buy insurance on the exchange as long as I'm not covered by Shoemaker, you know, my employer. But the income, but to actually get money for that, I have to, and I don't actually get the money. What happens is the government just pays the bill on my behalf. So both conditions have to be true. Well, shockingly, there actually is one thing that the federal government is pretty good at, Jack. And that's that at the end of the year, we as BGW, Shoemaker, report to the government all the covered belly buttons by Social Security number and the months that they were covered. So if Gary signed up to get insurance on the exchange, God knows why I would do that. But if he did, at some point, there's going to be a match of Gary's Social Security number reported to the government. And you get, like, they're on the spot with those notices. Hey, dude, you said you weren't insured. I got a record that you weren't insured. What gives? You know, that's number 1. The second is Gary has to file a tax return, and that shows what his income is. Guess what? They're pretty good at matching that shit too. You know, so then they go to Gary and say, that, like, hey, Columbo, wait a minute. You owe me money for all this health insurance that we paid for that you said that you couldn't afford, but clearly you could afford based on what your tax return said, sir. So my point in saying all that is like, when people talk about waste, fraud, and abuse in Obamacare, it's like, I don't act like, a lot of times I can tell you exactly where the waste, fraud, and abuse exists, but other than, you know, Dr. Nick Riviera, Starbucks gift card, whoever can say that where that came from Jack. Dr. Nick orders a procedure that I didn't need, you know, which happens in any insurance scheme, by the way, not just ACA. Like, you can sign up, but your window of opportunity to get caught is low. You know, like, you're gonna get caught, you know. So that's just the last point. It's like the people that are like, oh, all the reforms are gonna come from finding all the waste, fraud, and abuse that occurs within the sign up process of the ACA itself. It's like, well, good luck with that, because the government actually is pretty good at finding that already. You know, like, in other words, don't bank on that. There is none. You know, so it's just, hey, you know, just trying to keep honest on this one. Like, when I see that, I'm like, I need to not watch it, because I'm like, dude, you don't know what you're talking about. Like, that's the stupidest thing that I've ever heard uttered out of a human's mouth, at least in the last 5 minutes, as it relates to ACA and healthcare. Yeah, but I'll go back to what I started at the beginning. You know, did it do really what needs to be done to actually solve for the affordability of healthcare in the United States? Absolutely not. Epic fail. It went from this to this. More people got insured. That's a general benefit. You kind of got to say, like, at what cost, you know? So that's my 5 cents.
Well,
it needs
so
to go from this, or sorry, it's now at this. It needs to be right here, and that's going to take a lot of painful work.
so two questions. Was Dr. Nick Bones?
No, that was Dr. Leonard McCoy, sir. No Starbucks gift card for that. Everybody should know.
Okay. Yeah, I'm terrible at that. But then another statement is, whenever anybody says, well, we've got to pass the bill that's this thick to see what's in it,
Yeah.
could be a problem. Could be a problem. So
Yeah,
anyway.
no, I know. You'd also go, the other funny thing about this too is, you know who tried to solve this problem back in the day and just couldn't get it done? Richard Nixon, who actually had a shockingly, you know,
Really?
sound proposal that never got implemented. That there's been, like, I can't remember the studies off the top of my head, but had we actually implemented what Nixon suggested back when Nixon suggested it, you know, this actually would have been like this.
Wow.
Yeah, so
Well, maybe
it's just
they need to go
embarrassing.
back.
You know, this is what it took. Yeah.
Maybe they need to go back to
Yeah,
history and you know.
yeah. He was actually a shockingly good president, but for one little problem.
Yeah.
You know?
He would roll over in his grave if he saw the malfeasance going on today, I think. But
That's
whoa.
right. Yeah.
But Chuck Colson paid the price, and actually he became a better man because of it. But anyway, so Jack, get us back on the rails. So I know, like, the topic that we want to talk about is, hey, is that C Corp or is that LLC as buttoned up and protective of you as possible as you think it is? Or, you know, we'll talk about piercing the corporate veil. And I learned about that when our private equity firm blew up in 2009. So anyway, you have some additional stuff though before we go into that, I think, right?
Yeah, why don't we talk about what's happened over the past 24 hours for a little bit? So I will give you a little bit of background, and it's what you've heard before, so just so we're all kind of at the right place. So um, you may have heard that last night, you may have actually seen the president signing his signature to the bill that now is a law that actually will fund the government. So shutdown starts October 1st, lasted 43 days. The bill was negotiated, passed in the Senate, then it goes to the House. and then it's signed by Donald Trump. I won't get into all the details why it took so long back and forth, other than everybody, it was a brinksmanship game, essentially, is what it came down to. So what it does is it allows for temporary funding, but full funding for the most part until the end of January. Um, full year funding, actually, and for some agencies like the Department of Agriculture, the VA, military construction, and of course, Congress itself. They get paid. Um, okay, the federal employees that were furloughed over the past 43 days without pay will receive back pay, but that isn't immediate. You might imagine that it takes a moment to start the machine, the payroll machine back up and get those people paid. And there can be no mass layoffs at the federal level through the end of January. And so one of the concerns apparently was that okay, we'll fund it, but we'll only fund it, and then we will partially fund it by laying people off over the next 2 months or so. And so that is not permitted either. Services that were suspended, like national parks, food assistant program, SNAP, which I'm sure everyone has heard about now, which I think we all know more about that program now because of what we've heard in the news. Civil servant operations. Um, so keep in mind, this is not for the full fiscal year of 2026. It's just temporary that Congress still has to go back and draft and put together and pass for the full year. And so there's still going to be a lot of discussions and debate and fights about what should be in there, what should not be in there. Um, let's see. Okay. Make sure I cover all parts of that. So, okay, backlogs such as the immigration courts, federal courts, IRS, Freedom of Information Act processing continues. Economic impact. So, what is the highlights of that is obviously missed paychecks for millions of federal workers and contractors. If you've had to be at the airport or on a plane, you've experienced disruptive travel and strain on the aviation system to a point of being very dangerous, apparently, from what we've all heard with respect to air traffic controllers. Federal procurement has slowed down, SBA lending, regulatory approvals. So all those things will continue to move forward. But again, starting up those machines are going to take a while. I also did a little bit research as to what were that was mentioned in an article that there are permanent and not fully recoverable uh, results of the 43 days. And so I looked that up, and what is highlighted there is lost production. So the time that's lost you can't get back, and so anything that is going to be delayed, it's exponential. That includes being able to buy stuff and with the supply chain. Um, and then the psychological effects with all of us as consumers and as business owners as to what we're going to spend on and how we're going to deal with the fact that this is really only a temporary fix, and the end of January will be here before we know it, and it'll be another fight likely and potentially brinksmanship. So what does that mean for all of us? So the opportunity to prepare for that, but also the opportunity to be maybe a little more conservative with our budgets and our, as we've been talking about, putting together those pro formas for next year. I think that all of this is going to inform your putting those things together. So, um, I mean, that's really kind of about it. I can get into more details, but I want to get back into the core of what we're going to talk about. But oh, uh, the weekly hit 17 to 15 billion per week of the shutdown, a cumulative permanent loss of 7 to 14 billion dollars in economic activity for the duration, and then there's a drag on GDP. And so anyway, that's the quick summary of the what and the how and what to expect in the next 2 months or so.
that is good to know. I've got a nephew who works in Huntsville, Alabama for the government, and he was furloughed, and he was actually quite happy about it because his wife is in the medical profession and they just had a baby, so he could be home with the baby. And so like he was okay with it, but Ben, I mean, it was a mess, for a lot of people. And it's just sad. It's just sad that we've got such nasty division. It would be solved a lot if these yahoos that are the the um they are the legislators and they are the rule makers. If they had to actually follow the same rules that the rest of us did, it'd make a huge difference. Hey, we're going to shut down, and by the way, you don't get paid. Things might get done. We'll see. Supposedly, there's a move to actually like I guess it's it would be a constitutional amendment, but who knows? They can't agree on anything. So we still have daylight savings time, like that was supposed to be shut down a few years ago, and it's not. So, if you can't agree even on daylight savings time, like, well, I don't know, on budgets, let's see. So anyway,
And I'll share one thing with you guys, and it is I was privileged to attend a Veteran Day ceremony earlier this week, and proud moment for Scuderia Sant'Agnello, Team Sant'Agnello, which my father received Veteran of the Year award for Matthews this year for all his work with
wow.
various veterans organizations, including the ones in Matthews, but around the state. And so person who got up there is a city council member for Matthews, a veteran, and he was telling story, and he's a very good speaker. And he said, we just moments ago said the pledge allegiance, and listen to the words, one nation under God, indivisible, with liberty and justice for all.
Wow.
And so he went into, and it was very good. It's a fantastic delivery, and it got a lot of people, I think, thinking about, especially with all the stuff that was going on, because obviously the government was still shut down the other day.
Yeah.
So, but it was very interesting to, think about, what this really is about, how it's divided, the nation. So.
We don't get stuff done while we're divided, we're always going to have differences, but we got to find some common ground for a greater good. Hopefully that's what we're doing, whether you're red, blue, or purple, in between. Like purple is really good because it's Kansas State Wildcats, but just saying, um, so Jack, enlighten us, help us understand when we thought we were protected with this LLC or the C Corp, and obviously maybe we're not,
Yeah.
because there's some danger looming out there that people may want to be aware of.
And to continue on a comment that Adam made about Social Security numbers and being able to link things together. I mean, that's even more so in today's day and age of technology. So, the issues that we're going to talk about have always been there, and business owners have tripped over these tripwires, you know, forever. But it is the ability to be able to find these things more so because of our electronic commerce and our technology, and being able to cross-link things. So keep that in mind, because we'll talk about that more. But the quick history of all of this, and the reason why it's kind of increased outside of technology, is that you know, not necessarily because of COVID, but it seems to be around the time of COVID, 2019, 2020, that, all of these programs were coming into place, to assist us as business owners and as employees and as just people. And it was sort of loosey-goosey in some respects. And so it was fraught with abuse and fraud and everything else. And so there's been at least identified a link to that, and the increase in the allegations of piercing the corporate veil because there have been successes in that arena with respect to business owners that received money and was fraudulent. And, it was okay, well, is it the business? Is it so you have the lenders or the SBA or the IRS kind of coming after it. Now I say that knowing also that their ability to enforce all these things is also limited, as we've talked about, because of budgets, because of personnel cuts and everything else. So, but there's analytics, there's data that shows that this is where it kind of has increased in use by litigants. And so part of the technology aspects of it are things like, okay, imagine where you have a dispute between two individuals, two businesses, and there's allegation that what you were doing is a sham, in that there really is no business. The business is you. And so we're going to come after you and your personal assets. So that's really what this is. Understand that what you do when you're forming a business is you're basically, and this is very fundamental and 30,000 foot level, is you imagine four boxes: two personal, two business, asset liability, asset liability. And what you're trying to do is prevent there to be a diagonal link between those, meaning personal assets and business liabilities, and personal liabilities and business assets. And by doing certain things or not doing certain things, you are basically permitting those diagonal lines in that four box grid to be drawn and pursued. So think about things like when people use QuickBooks, and there is metadata behind all those kind of things. There's electronic resources that now in discovery and litigation that is being sought. It's not just the underlying data or the results or the numbers. It is, give us the underlying code so that we might be able to see where you originally spent something, and then you reclassified it as a business expense, but it really was a personal expense. So things that get brought up are things like, as I said, metadata, how you use your emails for certain things. Are you using business email? And again, none of these things by themselves are dispositive. Say, ah, gotcha, you crossed the line. You're now subject to piercing the corporate veil. But dealing with what emails do you use for certain things, login credentials, cloud-based payroll, point of sale, and these kind of things lead to certain presumptions on how you are governing, how you're running your business. And so it is a given. All of us are busy, and many times if you go into the Wayback Machine when you're first putting together your respective businesses, it's like, okay, well, yeah, I know we're supposed to be doing things, certain formalities, but we'll get to that when we're more important, when we're making more money, when we have to worry about things that, we might end up on the radar of the federal or state government. So we'll worry about that later. And then what happens is totally forget about it until something happens, good or bad. Good meaning maybe you're refinancing a loan, or you're getting a loan, or you have private equity coming in. Bad when you end up in the middle of a lawsuit and they're trying to say, accuse you of having pierced the corporate veil. So, and it perpetuates itself. You do one thing sloppy in your business, then it ends up being kind of a pattern of behavior. It's like, okay, well, we know we did this maybe not the way we should have, but we haven't gotten in trouble, so it's okay. And so some of the things that people actually get in trouble for are things like, and also I should mention, while the focus is on you as an owner in the business, and individual versus business, there's also, this concept can be applied to intercompany business as well. So for, affiliates, subsidiaries, parent relationship, so that if you aren't keeping good books and you're saying, well, really, so this subsidiary needs this paid, and so we don't have the cash in that subsidiary's operating account, so we're going to have the parent pay for that. And it's like, okay, well, is it a loan? Is it a distribution? Is it a capitalization event? So you can do that. I'm not saying you can't do those things. It's just that if you don't document them properly, then
Yeah.
you may have exposed business to business liabilities to business assets within your enterprise that may be separate divisions that are operating, or even separate entities themselves. So keep that in mind, that that's what essentially we're talking about. Um, some of the bigger sins of doing what you're not supposed to do is, and you hear that, okay, well, again, paying for that boat, paying for that second home or that condo, with the perspective that that money is yours. And so why not? You're just kind of being efficient. You're cutting off a step of having the money that is in the operating account of the business being distributed to you as an owner as a distribution or dividend, and then put into your bank account, your personal bank account, and then you spend money and you pay the bill. So that is blatantly overt, and obviously shouldn't be done. And again, isn't necessarily the gotcha moment, but it is one of those things that if you do that in addition to other things, it's evidence of the fact that you are not treating your business as a separate entity, a separate thing, that it's really just you with a different name essentially. Um, a variation of that is where the asset is actually owned by the business. So on the certificate of title, the business name is on there. On the lease for the vehicle, the business is on there. But for whatever reason, that vehicle doesn't really get used in the business. Maybe a spouse is driving it. Maybe it's just it's there just in case, and someone has adopted using the vehicle. And so those kind of, and what you're hopefully seeing is a pattern of informality and lack of attention to detail that gets people in trouble for these kind of things. And so um, again, sloppy bookkeeping and those kind of things. Things that
Hey, Jack,
yep.
real quick question on that, because we've all seen that. We've seen, especially when they're, taking off and they don't know if this thing is even going to get off the ground, and they're robbing Peter to pay Paul to make, expenses and pay people and all that kind of stuff. And then, hey, somehow it got airborne. Yay, we got a real thing, but they still have kind of sloppiness. Have you seen a situation where then they're like they get religion? Oh, okay, we got to get like our books clean. We got to have some professionals that actually help us, that know what they're doing better than we do. We want to focus on making this widget or providing this service. Have you seen a situation where they actually progressed and, hey, now we got a big boy business and we got a big boy operations, and we have accountability and we have safeguards, but then let's say 08, 09 hits, and just destroys the industry that they're in, and they are, on the rocks, and now all of a sudden they've got creditors coming after them and whatever. But let's say that let just for grins and giggles, let's say they started this thing in 1990, and it was a hairball, just a mess. But then in 2000, they got it together. Okay, now we got systems, processes, and all that kind of stuff. But now they're in real trouble in 2009. Have you, and let's say lawsuits are flying and all kinds of stuff. Can somebody pierce the corporate veil because they go, well, look at what happened back in 1990, 94, 95. It was a mess. They were commingling all kinds of crazy stuff. But they put a point of demarcation in 2000. My question really is like, hey, once they did that, is the firewall up or not?
So, because I don't have a case or anything to say yes or no, this would be Jack theory,
Yeah,
or
cool.
kid theory, right? So, I would say, first of all, you claims don't la most claims don't last forever. So you have a statute of limitations issue. So if it were the bad behavior or whatever, in 2009, let's say it occurred 3 years earlier, then, it's like, okay, how is the business being operated in 2006 is what really they would look at. I think that an assertive and creative plaintiff's counsel might try to go back and say, all these things from prior time, but you would have to be able to allege that with certainty and prove it. And I would say that, in the discovery process, what happened so long ago is probably not discoverable. It's outside the scope of discovery. And so I would say for a few reasons, again, the legs that a claim might have, how far you can look back as to the operations of the business, generally in a discovery in a dispute, unless the behavior relates back to that time. I think that a litigant would have a hard time alleging that, okay, you pierced the corporate veil because you weren't doing these things properly previously. I think it would be more apparent that, okay, yeah, we were doing these things kind of sloppily, not purposefully,
Yeah,
we just didn't
right.
know better. And now when we were fully informed, we, immediately
Yeah,
got into and did it right moving forward. So there's really no ability we're demonstrating by our behavior that we are treating the business as a separate entity, as a separate thing, a separate person. And that it will, and that's what they'll look at. I mean, I would imagine that's how that would turn out. But
okay.
great question.
Adam.
Um, you may have answered this, Jack, so I apologize. And I just didn't understand the answer. But you get like I think I've always understood piercing the corporate veil. The way if a client ever says that, I'm like, well, let me give you a simple example. Don't make your mortgage payment out of the company account. Like don't use the company as your own personal piggy bank. And it's like those situations are obvious and clear, right? But then you get to the entire other end of the spectrum, which is within your 7-year statute of limitations, your operating agreement specifies there must be an annual meeting of the partners. Produce the agenda, the minutes, and the key decisions made from 6 years ago. And sir, if you cannot, this entire thing is a sham company, not run like a real big boy company. Like I know we should, and hell, I'm a CPA, I should know better, right? But it's like, like where's sort of the spectrum in terms of like, well, absolutely don't freaking do that. Here's the jump ball. Like, yeah, the jury would laugh that one right out. Again, it can be Jack theory. In other words, like shoemaker compliance police don't, get rid of Jack on this statement.
Yep. So totally an excellent question. And I will start out by reminding everyone that a huge difference between an LLC and a corporation is that in the North Carolina Corporations Act, there is still the requirement to either have an annual meeting or have consents in lieu of the annual meeting. And, in some cases, it's ridiculous because if it's a one-person, two-person shareholder entity, it's, hey, we, the shareholders, hereby bless everything that we did over the past 12 months, and here are the board of directors. Then you have a separate piece of paper that says, we, the board of directors, which is the same two people, that we hereby bless everything that we did, and here are the officers, which are the same two people. And so you have
Yeah.
that redundancy, which is kind of ridiculous, but you do have to go through those things. And what we see a lot of times is, again, a major event occurs. You have perhaps a sale of the company, or you're buying assets. And it's like, okay, well, make sure that your corporate formalities have been adhered to. And well, yeah, you know what? We have this thing that looks like it's fake leather, and it says minute book and has our company name on it, but it has a lot of blank paper in it, right? And so we assist with getting them in compliance with doing with getting to that point. Um, so, and I would say to address your question specifically, that yes, I mean it's one of the sins of, potentially indicative of not adhering to corporate formalities, and hence maybe concluding that you've pierced the corporate veil, or the corporate veil can be pierced. But I would say that a lot of times, let's say you got a $1 million loan, um, there will be corporate formalities definitely within that transaction. The bank will require you and your shareholders to sign a corporate resolution. So there will be certain formalities that are adhered to, just based upon what is going on in your business. So, that's why not doing those minutes year after year is not necessarily fatal or totally indicative of being able to pierce the corporate veil, because there are other things that are going on in the business to associate with that. So I have a list of things that to be mindful of as well, that
Yeah,
are
good.
problems that you may not think are problems, because people do focus on things like the paper and the money, where the money is flowing from and to. And those are really the two big things, but there are other things that you need to consider that would be alleged in a complaint for, or a litigant saying, you've screwed this up and we're going to go after your personal assets. All right. Um, okay. So red flags. Undercapitalization. Don't talk about that a lot, but and it is the example here is carrying $5 million of risk, but only $25,000 of capital, that's showing on the books. And so, having it undercapitalized, and it may be, and I'm not talking about the original shareholders agreement that says your initial capital contribution is something nominal, like 10K each for two shareholders for your 50%. I'm talking about what is your actual capital in the business, and what is the capital of the business associated with that. Related to that is not.
Fun side fact.
Yes.
In the UK, maybe in other European countries too, but in the UK, if you're on the board, you have to register with a place called the Companies House. And if the company that you're on the board with is insolvent, you have like a duty to report that. Insolvency being, I don't have enough capital to actually operate. Liabilities exceed true assets. So it's like they take that crap seriously. Like relative to what we do here.
Yeah, that's very interesting, because I had not been aware of that. And early on in my career, and there was a question of, okay, what do we know about this board member? And looked it up, and it was like, oh, okay, hey, here's all the information you need about, are they, where else are they a board member of? And it was like kind of validating this person's credentials. So yes, absolutely. Um, we've talked about this somewhat, but maybe not directly, about owner draws. So, hey, the business isn't doing that great. There is cash, but and we're going to pay ourselves as owners a ton of cash, when really the business can't really sustain that, and we're holding off creditors and things like that. So, I mean, that's definitely that undocumented intercompany transfers. We talked about that, and that it's not just about individual versus company. It could be shifting money between companies, and then basically pulling money out of that company that maybe the financials look a little bit better so you can receive a dividend distribution from that corporation or that LLC when the money has been shifted. So basically pulling, if it can be traced back to that other business, pulling money out of that and creating maybe an indication of lack of solvency or insolvency. We talked about paying personal expenses. Some other examples are paying a child's tuition or a mortgage through the business. There was one interesting case that I read maybe a couple years ago, which was a kid was an employee of the business. Tuition was paid for by the business. Similar to, okay, well, the military pays, ROTC pays, and then you have a commitment to them afterwards. So there was allegedly a commitment to the business to come back for a while. I don't remember if the kid actually came back and worked or not. Actually, they remained on the payroll, was getting paid as a consultant kind of thing. And so, harder to trick the government and litigants in that respect. So we talked about minutes or written consents, single payroll across entities. So again, cross-pollinating. Again, that is not prohibited, but if you're going to have personnel that are working for two different companies, then there should be a record of what they're doing for each company and how they're getting paid. And I don't know, Adam, if what your thoughts are on, is it, and I would imagine, do you have to really go and set up a management company that houses the employees, that provides for, and I've done that, but I don't know if you necessarily need to do that, because the ability to be able to allocate what someone gets paid from different entities electronically, and maybe getting two different checks that are printed from two different companies. So what have you seen in that respect?
It's kind of the same thing. I mean, you really want to have the funds flow, like they actually should flow, and get that piece buttoned up. In other words, like, I mean, it's going to sound really stupid. It's like, I'll go before the jury about not having the minutes, but when it was like I was too lazy to open up the bank account for the management company and actually move the people over onto payroll like they were supposed to be, and I was doing everything over journal entry, it's like, I don't know, dude. This company seems to exist on paper only. Like, nice, not nice try. I mean, that's sort of the equivalent of me saying that, well, my house is my VRBO is actually in a company name because I established a company, but I never actually moved the title over. Like, I don't see a scenario where I'm winning that argument, Jack.
Yeah, absolutely. And that is part of the whole documentation thing, which is, okay, well, yeah, it's not showing ownership, whether it's a vehicle, the certificate of title, whether it's a piece of property, and I get into interesting issues when, okay, well, you're buying something to, and I'm making this up, decorate your home office that is in your home, that you have put a computer on the dining room table, and that is not your office. So yeah, I don't want to get into the logistics and details about that, whether it's proper or not, but so please consult your CPA when you have those kind of questions about whether it is deductible or not. But some other red flags, um, no arm's length affiliate contracts. So you do establish a management company that is providing services to various entities within the enterprise, but you don't actually have contracts for them. So it's more of, okay, well, you figure out what the relationship is based upon the checks that the person had received from the various entities. Again, very sloppy way of doing it. Um, Renting property to an affiliate at a less than market rate has been weaponized as potentially piercing the corporate veil. For example, when you have two individuals that own the real estate through an LLC that are renting back to the operating agreement, the operating company which they own, the two people, maybe husband and wife, and it's not market rate. And so money is going from the operating company to the landlord, the owner, and that money's being extracted. So is it really arm's length? And is it a way that really the individual is benefiting from and not treating the corporate formalities? Now, having said that, I'm not suggesting that the rate has to be totally at market on its face. There may be other things that's being exchanged for value that would make the market rate get up, or make the rate get up to market, the total amount that is being charged to the tenant. Let's say that the tenant's putting in improvements and is responsible for certain things. So it is, again, it really depends on the facts and circumstances, but I'm just sharing with you some things that have been utilized. Sharing of credit cards, not having a good reimbursement policy, no controls over petty cash, those kind of things. So the theme that you're hearing is um, really, I could put it under academic laziness, essentially, and not doing things the way you should, so that if someone were to come looking, that they would say, oh, yes, we see how, yes, you ultimately ended up with that net income in your pocket, but we see how it was generated, how it was applied within each business unit. We see how the money was transferred between the two or three or four, and we see how the money ended up in your pocket directly, so, or indirectly, essentially. So the there's so much more we can talk about, and that's why I took some notes, because we could go way beyond and spend entire days on what to do, not to do. But essentially, the message is, some practical guidance on the governance and legal side of things is, update your governance documents, take a look at them. We've been saying that forever. Take a look at them, because there may be things in there that you had forgotten about, or maybe you aren't doing that you're supposed to be doing within those. And if you're not doing those things, then some that may be used against you in the whole piercing the corporate veil. Written consents for all major decisions, even if you are an LLC, you may consider, because you're not required to do that, but you may consider doing those kind of things to make sure everyone's on board. A lot of times with major transactions, you're going to have a consent that is drafted so that one person can sign all the documents. So basically, it's all the members, all the managers that are saying, here, please sign this. So, yes, sir.
Yeah, Jack, you keep on referencing Pearson, the corporate veil. I did want to also just share, like, this crap comes up when you're selling the company too. And I'll give you like a common example of where this just becomes a night. And when I say common example, I'm like, this isn't Jack theory, like this has actually happened. You know, um, we see that Gary obtained ownership in BGW in 2000. This actually didn't happen with us. I'm changing the names, but we see that Gary obtained ownership in BGW in 2019. We'd like to see the records associated with that transaction. You know, so I produced, maybe I was good and I actually had some records, but the records don't align with what was on the tax return. So it's like foul number one. Well, what happened? Well, I mean, I guess in the course of, doing this, we made some modifications and some adjustments were made to where we finally arrived with what was on the K1. We should be good about that. Like, we're all good with it. Buyer's counsel. Uh, Now there's like an unlimited potential lawsuit for Kerry to come back and actually sue us for the ownership that he was shorted by 1%. Because there's a mismatch between the K1 and what was in the acquisition document. And by the way, we're not seeing proof of payment from Gary. So blah 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 blah. So we're just going to need to get Gary to sign a letter absolving, blah 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 blah. Oh, which is ridiculous. So then I go to Gary and I'm like, Gary, we got to get this resolved. I would like to discuss with you my list of grievances. And if you would like my signature as a minority shareholder, even though I don't have a vote in this transaction, I know that I can hold it all up if I don't give you this. It's going to cost you. So like that, like the likelihood of me getting sued, probably not super big. The likelihood of that crap happening upon the sale of the company, high.
Yeah, another possible end to that story is not necessarily, hey, let me give you my list of grievances, but having the majority owner basically tell everyone, oh yeah, that person's on board, they've been with me, they're gonna roll with whatever, and then they get a copy of the document. For example, maybe some rollover equity, not just paid out. And it's like, and then they start asking questions about, okay, wait a minute, am I really going to get paid this money? And, creates all kinds of problems for the transaction, the underlying transaction itself. So yes, definitely will give others leverage unintentionally if you don't follow these formalities. So beyond piercing the corporate veil, although that's the concept that they're using, as you said, which is that would be the concern of the buyer that might happen. And so there may be things that maybe were not appropriately approved in the past that need to be Band-Aid covered. It might result in a larger indemnification fund, so a holdback escrow. It might move money from cash into escrow or rollover or an earnout. So there's all kinds of potential consequences for not following these formalities beyond in litigation when someone's trying to get something, trying to access your personal assets for a company liability.
So Jack, I've got a question. In your expertise and your experience, what kind of percentage of the time when somebody threatens to, there's a lawsuit that's going on, and I know you're not a litigator, all right, but where the sabers are rattled and hey, we're threatening, we're going to pierce the corporate veil, what's the percentage of time when it actually wins in a range? You could give me a range. Is it the majority of the time? It's a very small, thin minority?
I would say on the minority side of things, like not even a large minority, because it's difficult to prove, because meaning, yeah, you can look at the numbers and you can say, okay, yeah, this person used the personal credit card and did certain things. So it's not that you're going to be able to work your way or talk your way through that, but there's usually countervailing arguments, so and set offs. So for example, let's say that the owner was entitled to distributions, dividends, and didn't take those. We saw that problem way back when with the PPP loans, and
Yeah.
is the person, because the person did not take the money out before December 31st, and now, do they need the loan or not? And it is, well, if I hadn't been dumb enough to not pull the money out and leave it in there, and in some cases it was an S corp, so it's after tax money that's just sitting there. So it's I don't want to use the term retained earnings, but it's basically additional capital that's just sitting there that is really owned by you. And so I would say that because there's countervailing arguments, and usually there are stronger arguments for that, which is not so much piercing the corporate veil, but more of fraud, that you are using company money for
Yeah.
personal assets, or for personal expenses, in the scheme of, maybe owners suing each other in a business divorce kind of thing.
Yeah. Yeah. Interesting. Yeah. Fraudulent conveyance. We didn't talk about it, but it was inferred. I never knew what that term was until Oh my goodness. I did not commit it, fortunately. And but man, all right, cool. Well, we're at the top of the hour. And so what we're going to do is we'll put this up on the BGW CPA or BGW YouTube channel. I can't say CPA. And Shoemaker will put it up on their YouTube channel. And we'll be back for 281 next week, Lord willing, if the creek don't rise. But anyway, thank you, Jack, for giving us your, you know what would be fun, Jack? So we're past the red and blue standoff, but wouldn't it be fun if we still got a little insider baseball feel from your guys on like what was really going on? You know, like what I think that would be very interesting. Not that it's going to
Absolutely.
solve any of our problems, but it would be more entertaining than Jerry Springer. So and
Yeah,
not
that's
say,
totally been on my mind. So yes, I want to, if I can't get both of them in the same ring, then get one of them
yeah,
and
yeah, let's
maybe
see.
the other one, the other, some other time as well. So yes, I will
Let,
continue
let's see.
to do a soft press on them.
All right, cool. Thank you. Thank you, Adam. Drive safely. Charge back up at the Gaffney Peach. And
Good, man.
all right. See you guys. Have
Thank
a good
you.
one.
Bye.
Bye-bye.